Hello, my name is Alexandra Shepis. I'm one of the lead advisors here at Francis Financial. Today, I'll be sharing our investment insights for May 2023. We'll look at what's going on in the markets and some key takeaways. Let's go ahead and jump right in. The strong start to the year continued in April across the various asset classes, except for small company stocks, which were hurt by the ongoing issues with small and mid-sized banks. U.S. large company growth stocks had a terrific boost and are up nearly 16% year to date. On the international front, we saw international stocks continue their recent outperformance with another strong month, returning nearly 12% so far for this year. The traditional 60% stock, 40% bond portfolio, so many experts declared dead in 2022, has had a great start to the year, up 6.4% through April. Now, despite a great deal of highs and lows over the past 3 years, a set it and forget it balanced portfolio would have compounded at 6% per year. This is a great reminder of why it is so important to ignore the short-term noise in the markets. One of the key takeaways is that the first quarter earnings season has been mixed, but we're seeing some large banks and tech companies exceeding expectations. First quarter GDP growth slowed to 1.1%. This 1.1% growth in GDP and strong earnings season have some investors starting to discuss a no landing scenario rather than a soft landing for the economy. In this no landing scenario, the economy continues to grow despite the Federal Reserve's best efforts to tamp down inflation with interest rate hikes. Speaking of the Fed, at its May 3rd meeting, the Fed increased rates 25 basis points or 0.25%. Forecasts are for the Fed to pause additional rate hikes, at least for now. We still expect a relatively shallow recession toward the end of 2023, driven not only by Fed tightening, but also by reduced lending from small and mid-sized banks as they look to strengthen their balance sheets. Inflation continued the recent downward trend with CPI up 5% and the Producer Price Index, or PPI, up 2.7% year over year. For May, the focus will be on the continuation of earnings season and the pending debt ceiling deadline, which is forecast for early June. With the debt ceiling deadline approaching, we do anticipate more volatility than usual over the next several months. Ignore the noise and stick to your long-term plan. And overall, keep in mind that we have seen an outstanding start to the year in the markets, continuing the recovery started in the fourth quarter of 2022. So those are our market updates and takeaways for the month. Thank you so much for joining.